At this point, I'm not shocked by anything. You got to ask yourself, really, I mean, how is it legal that J.P. Morgan is solely accountable for 96% of all commodity derivatives, while Citigroup is single-handedly responsible for over 70% of all precious metals derivatives?
Hey friends, thanks so much for tuning in. We really do appreciate it. Look, I have on the line the CEO and president of Callinex Mines, Max Porterfield. And the reason I wanted to get Mr. Porterfield on is to discuss base metals, exploration, and where the supply of physical silver is coming from. Because as you guys know, on July 7th, the U.S. Mint suspended Silver Eagle sales again, saying that there will be no more supply ready for purchase until mid-August. It's a big deal. Mr. Porterfield, welcome.
Thank you for having me.
Well, thanks for coming on. We really appreciate it. Look, I want to play a soundbite for you from our friend Andy Hoffman from Miles Franklin, who I interviewed last week. And it really sort of got me on this path of wanting to get you on and other mining CEOs on to talk about the real world state of production of physical precious metals, because we know the cartel has an endless supply of paper that they've been throwing at this market. Listen to this soundbite from Andy Hoffman. I want to get your impressions on it.
And in silver, now that the base metal prices are in full free fall, we're going to pretty soon, I think we're going to be at the 2008 lows of lead, zinc, and copper. And then you're going to really see a free fall in silver production. And meanwhile, we're at record high demand worldwide, and we're at record low inventories worldwide.
So, Mr. Porterfield, I just wanted to start with that soundbite to kind of set the stage. Just wanted to get your impressions on the state of the base metals and the precious metals as you see it. Does it surprise you to see the price of silver trading all the way back down to the low 15s last week?
No, I don't think it comes as a surprise at all. What Andy's statement was saying in terms of base metals and zinc prices and so on is because oftentimes here silver is a common byproduct of these large copper zinc mines. If you take into consideration what we're looking for Callinex, in Flin Flon, for example, in the belt that we're exploring for, we're going after copper, zinc, but they have a large precious metals component. Same goes for the copper mines you have in Peru, and so on. So I think that's going to have an implication on overall silver supply as well, just based upon the overall production of those base metals mines. Yeah, so I think that's what he was talking about.
Right. That I think is Andy's point, is that so much of the physical silver supply in the world is coming from miners that aren't primary silver miners. And I think one of the concerns Andy has, Max, is that as the base metal prices fall, I mean, we saw the bottom fall out of the price of copper last week. There's going to be less in it for the miners to keep operations going. I mean, I think that's ultimately the concern. If so much physical silver is coming from miners that are not primary silver miners, because the primary silver miners have been mostly decimated already by the paper prices. So I guess the question is, what's the future for mining in general if the bottom falls out of the pricing for zinc and copper and these other base metals?
Well, I think in longer term, it's going to set up a huge opportunity for us that are still in the space, still doing exploration, and still actively developing these projects. Because people oftentimes always in the media want to look at the demand side of the equation. China growth might be slowing, therefore their global consumption of copper or gold or silver or zinc or what have you might be impacted in the shorter term. But what everyone really fails to understand is that there's a supply side of this equation. And so if you look at zinc, for example, zinc's in the middle of a near-term shortage due to the supply side, where you've got a couple of large mines coming offline. Copper is the same situation, and you've got to look at the lead times from discovery to production. Typically, you're going from an exploration or discovery to a production for an average copper mine is about 11 years. So these things have a long lead times to go into production, and not only that, they're becoming more and more difficult to find. I think that's the real opportunity is for investors that are seeing this and understanding longer term this is not sustainable. You're going to have new supply come online, and the only way new supply is going to come online is by higher prices.
Well, it's interesting because I'm sitting here thinking about all this, and it just, it's not lost on any of us listening how Wall Street doesn't really create anything, but they sure do a great job at destroying a lot of things. They're destroying free markets. Wall Street paper dictates a silver to gold ratio of somewhere in the neighborhood of 75 ounces of silver for every 1 ounce of gold. And again, Wall Street criminals, LIBOR manipulation, so much going on, and yet none of these guys ever do any jail time. It causes us to wonder, Max, where is the justice? Where is the justice for the free market? Where is the justice for the little guy? And to add injury to insult, now we see the U.S. Treasury saying that in the future they'd like to stop making our pennies out of zinc. Well, they used to make them out of copper. Pretty soon they'll just be made out of steel, and then after that they'll just be ones and zeros on computers as they take our physical money away altogether.
No. I totally agree with you. you. I think that one of the key reasons, again, let's go back to the supply side and the cost to produce these things. Again, they started making the pennies were used to be copper, and then they went to zinc. But then now zinc prices, it costs more to make a penny out of zinc than it is to produce a penny, which is why they're discussing steel. I'm a native Texan, but I moved up to Vancouver about 3 years ago. Really, when I saw quite a bit of opportunity in the exploration business and the commodity business overall. And with that, here in Canada, just a year or two ago, they actually completely did away with the penny. So it's kind of surprising to see, or maybe not so much, Canada really being a kind of a lead in doing away with a penny, which is, again, you're talking about rounding error on a computer. That's what it's looking to become with all the inflation that takes place over time.
Yeah, 100% agree. And, for those listening who don't know this, many do, if you want to, go to the store, go to your bank, get a roll of pennies, get a box of pennies. Every penny produced from about 1982, 1983, I think it was 6 months of 1982, and in all of the years prior, any penny you find essentially prior to 1982 is copper. I think it's 90 or 95% copper max. And for those listening, each one has a real-world tangible value, not counting the cost of production of making the penny. The copper value alone used to be 3 cents. Now I think it's around 2 cents. So face value 1 penny, but it's worth 2 pennies of copper. And it's a great example of how they are removing wealth from our money. And, it makes me wonder, too, as we see Western governments sort of demonetize our money, what we're seeing in China is the People's Bank of China just announcing, I think on June 26th, that there needs to be a new world reserve currency. And what do we see China doing? We see China importing physical gold and mining hundreds of tons more. Some are even estimating, Max, and this comes from Alistair McLeod, our friend over at Gold Money, that at this point, China may have well north of 10,000 tons of gold. And at the same time, Bloomberg is adding fuel to the fire by openly admitting that if China had amassed 10,000 tons of gold, it could easily justify a gold price north of $60,000 an ounce. Now, that comes from Bloomberg. That's not me. That's me reporting what Bloomberg is saying. China's official gold reserve holdings, as you know, Max, stand at 1,054 tons as of the year 2009, the year of their last public report. So my question for you is, how much gold do you think China could have amassed in the past 6 years? It's a question that needs to be asked. What is the significance of China's gold position from your point of view?
I think it's very significant. Again, it shows that they want to move away from the dollar, and now they have actually come out and stated it, like you just mentioned here. But I'm not sure how much gold China has amassed. Just like many question how much gold is really at Fort Knox.
Right.
But what we do know is that China is the largest gold producer, and they're actually a net importer of gold. And it's not really clear how much is actually mined and kept in the country. But to be clear, I do suspect it's a very large amount. I mean, if you look at gold's role in the Chinese culture, it's always been as a store of wealth, and they've always had an affinity for gold, China and India. And this has gone back, centuries. And so recently, I think that even in the recent, bull market that, growth that China's had over the past decade and a half or so, that is what's really led a lot of the consumption for gold has been the rise of the Chinese consumer. I think the recent events out of the Shanghai Composite, crashing, people are drawing a lot of comparisons to that, the pullback that you've seen in the Chinese markets over the past week and a half to what happened in 1929. In fact, the same things they did back in 1929 in the crash back and down in the United States at the time to kind of curb that. You're seeing them do that in China. But I think ultimately this will also send a signal to the Chinese consumer, because participation in the Chinese stock markets is a relatively new to them. So a lot of the wealth that's been created by investing in the market and that's been lost so quickly, I think will send a reminder back to them, in a bigger sense here, going back to that cultural affinity, that it is a store of value and wealth. And I think that'll just only boost that perception with what's occurring in their markets currently.
Yeah, I think the people of China that have gotten involved in the stock markets, there's been such a frenzy there that now these people are actually paying, a dear price for their frenzy. They're going through their own tulip mania. They're going through their own tulip bubble, and they'll learn. But you know what? Humanity has a very bad long-term memory. The stock markets here only go higher, and people forget what happened in 2008, and they forget what happened in the internet bubble, and they forget, and they forget, and they forget. I wonder, let me ask you this too. What is your opinion on copper as a monetary metal? I mean, to the degree that, as I just cited, you can pick up a penny worth 2 cents for half the price. Is there any place for it in the portfolio of a little guy? I think Kyle Bass took delivery of $1 million in nickels. So do you see any room for discussion of copper or nickel as a monetary metal or as a hedge against hyperinflation?
Well, I think that just look what China's done, and how they've gone out in multiple commodities and look to acquire those assets, whether it be in exploration companies, actually outright buying mines, and really to create that basket approach. I spent a number of years earlier in my career working at U.S. Global Investors, and they specialize in natural resource investing. And one thing that we always advocated to investors, like you said, the mom and pops or the little guys out there, is to have an allocation to natural resources as a hedge. And then you want to split that allocation between the base metals as well as precious metals, and then further diversify that between the mining shares and then the physical commodity itself. So absolutely, I think the copper has a place within a portfolio, just as oil, gold, and silver and zinc do, in that kind of a basket that would make up, I don't know, say 20% of a portfolio. As a diversification tool.
Yeah, I think that makes a lot of sense. I mean, I wrote down a couple of words as you were talking, as it relates to Kyle Bass taking delivery of $1 million worth of nickels. All of these metals, when you hold them in your pocket, are tangible, they're physical, it's wealth that is quantifiable. Now, that against the backdrop of ones and zeros on computers and literally tens of billions, tens of trillions, in the case of derivatives, of paper. Citi alone...
Right.
Citi alone has increased its precious metals derivatives position by more than tenfold in the last quarter alone, $3.9 billion to $53 billion in precious metals derivatives. JP Morgan currently holds $4 trillion in commodity derivatives positions in precious metals. Are you shocked by the ridiculous amount of paper metals in the futures market supplied by commercial banks?
Well, at this point, I'm not shocked by anything. You got to ask yourself, really, I mean, how is it legal that JP Morgan is solely accountable for 96% of all commodity derivatives?
Right.
While Citigroup is single-handedly responsible for over 70% of all precious metals derivatives.
Good point.
So that's one of the reasons that I myself am focused on developing a hard asset company. Looking to discover and develop real tangible resources. It's really like from an investor standpoint, as there's different ways you could be like Kyle Bass and actually go out and purchase nickels for what you see is the tangible value, or what you can do is purchase shares in an exploration or mining company that actually has that in the ground. So by purchasing the shares in the company, you by way actually purchasing some of those resources that are there in the ground that are kind of backing up the valuation on the company. And in a rising market, I used to work at a resource centric shop that focused on natural resources investments, and really what you see in a bull market or a recovery type of market, which I definitely think will occur after the bottoming out period in our space occurs, is that while you have a rise in commodity prices, gold, for example, you have a 1% rise in gold, typically on the mining shares, like a company like Callinex, you'll see a 2 to 3 times leverage to that. So what I mean by that is if you see a 1% rise in a commodity price, whether it be gold, silver, copper, zinc, an underlying mining or exploration company that has those type of assets within its portfolio will rise 2 to 3 times that amount. So if you have a 1% increase in gold, for a gold company, you'd have a 2 to 3% increase in the valuation of that particular those share prices of that company.
Yeah, I hear you. Unfortunately, on the downside, you can really get decimated too, as some of us who hold mining stock shares have found over the past 4 years. Do you think this has been one of the worst 4-year periods in the history of mining, or is it the worst?
Well, first off, again, I want to go back and reiterate my comments earlier about having a balanced portfolio, and you have a natural resources be an allocation to that overall balanced portfolio. So what I mean by that is when you do have these type of you're investing in a very volatile sector like the natural resource space, and like you mentioned, you've had a rather large downdraw or pullback on the prices of those mining shares. In a balanced portfolio, that'd be a time to rebalance your portfolio and allocate more to that, and kind of continually to do that rebalancing of any portfolio on a semi-annual to annual basis to take advantage of the inherent volatility in each of those asset classes, whether it be in real estate, domestic equities, natural resources, or the physical gold and silver. With that being said, the last 4 years have been tremendously difficult for the mining shares, without a doubt. And from everyone I'm working with, my chairman Mike Maslowski, for example, he's in the Canadian Mining Hall of Fame, has spent over 50 years in this business, and he definitely says this is the worst he's ever seen it. And he's been around longer than I have, so I've got to kind of go by what his opinion is, and the opinions of many others that to echo the same thing. But with that being said, fortunes are really built in this business by taking advantage of these type of cycles that are inherent. That's why I joined Callinex just over a year ago, because I saw that type of opportunity. You really want to come in and build these type of companies where you can acquire assets much cheaper. You can do exploration much cheaper because you're not fighting in bidding wars to get the best drilling campaign or finding the best geologists or what have you. You can really use the down cycles as opportunities to grow the business for the longer term, and that's really opportunity that we see it here at Callinex, and I think investors should see that despite what's occurred in this sector over the past 4 years.
Sure. Well, that makes a lot of sense. And just real quickly, what is the ticker for Callinex Mines?
Callinex Mines trades on the Toronto Venture Exchange on the ticker CNX, and then we also have a listing down in the United States on the OTCQX, and the ticker there is CLLXF.
Okay, well, let me finish with this then, because as a former Texan, as a red-blooded American who's seeing what's going on in this country, but now you're living up there in Vancouver, does it bother you what you see going on down here? I mean, there's an awful lot of tyranny and fascism at play here in our government. From Hillary's private server in Chappaqua when she was the Secretary of State, all those emails being scrubbed clean, to the TPP, which the Congress and the Senate have fast-tracked, which is just going to farm out more jobs to foreign nations and gut the middle class, to mandatory vaccinations being signed into law by Jerry Brown in California, to Operation Jade Helm coming up this summer. As a former Texan, how do you feel about what you're seeing here? Are you glad you're living in Canada? Because I got to tell you, I'm a little envious at this point.
Well, first of all, you can take the man out of Texas, but you won't take the Texas out of the man. So I always will be a Texan, and I think being a Texan is more of a mentality and how we think a bit differently. It was kind of nice to see that Texas was followed suit with Venezuela and a number of other countries, and actually recalling their gold back to Texas from the Fed.
That's right.
So that was quite unique to see, and it is rather frustrating to see the continuous, all these continuous things that you mentioned just now, and really this entitlement mentality that a lot of Americans have, and this entitlement spending programs that just continue to go on and continue to go in debt, which is not good for the country longer term, and not having a balanced budget. You can't continue to go on like this forever and not think there's going to be ramifications in the future. I know that's something you definitely agree on, and I'm just, I am fortunate to be in the position I am, running a great company up here in Canada.
Well, yeah, and what our good fortune is, though, is to be able to get guys on like you, Max, who are willing to speak truth. I mean, you address J.P. Morgan's criminality, you address Citi's power in the manipulation of the metals, and I really do appreciate your candor. It's refreshing to talk to guests, especially CEOs of companies who are willing to speak truth. I really do appreciate it, because this is a time where the tyranny and the fascism now is so overreaching that people are starting to be reluctant to speak out and speak truth. So we really do appreciate your voice. Before we let you go, how are you guys able to survive in this market? And tell us a little bit more about your company before we lose you.
Again, I think it's like in any business that you're investing in, whether it be in the resource space or you're going to go buy any kind of retailer or whatnot. It goes back to people, because a business is ultimately made about people, and the people are the biggest resource to any company. And we've got an excellent team. We also have a great set of project portfolio that are highly prospective, again, across base and precious metals in Canada, which is one of the safest mining jurisdictions in the world. And we have a very supportive shareholder base that has a very long-term outlook and see this downturn as an opportunity to grow the company. So we're very excited about what we have going on, and really excited to get to work with our drilling campaign this summer.
Yeah, and I guess the final question for you would be, do you think that the end to this precious metal price suppression is near? I mean, India just imported 25% of the world's supply of physical silver in 2014. This year, they're on track to import 33% of the world's physical silver supply. I just can't imagine that this cartel can continue to stomp on the prices forever. It cannot go on forever. Do you see light at the end of the tunnel?
No, I definitely see light at the end of the tunnel. I think it goes back to, what is the cost to actually pull these the precious metals or base metals out of the ground? You can't have commodity prices that are below the cost of production. That's unsustainable, And the longer this goes on, the bigger the move you're going to have on the upside to then incentivize development of these projects to come on more quickly. So I definitely think it's unsustainable. How long will this last? I can't tell you exactly. I don't think anybody really knows the answer to that. But I do think we're much closer to the bottom than we were definitely 4 years ago, and do see a bright future ahead of us. Just looking at the supply-demand fundamentals, for the base metals and precious metal space.
Yeah, 100% agree. And guys, our guest has been Max Porterfield, the CEO and president of Callinex Mines. Max, thanks so much for your time.
I really appreciate you having me. Thank you.
Well, thank you, sir. And guys, thanks for your support over at SGT Report, thelibertymill.com, and thephaser.com. Real news 24/7. Thanks for tuning in. Bye-bye.